All right. All right, let's get started. This stream will not be very long, but the purpose of this stream is to prepare for the upcoming week in a meaningful way that can be utilized over the next few days and then can be used to adjust how you view the week that follows. Much of the trading that takes place throughout the course of the week should give you a better idea of how things move. In other words, Monday should give you a better idea of what you're going to see on Tuesday, Wednesday, so on and so forth. At least that's usually how it goes. But Sunday, the day that nobody wants to use to prepare, tends to come in handy, or there are benefits to it more often than not. Just on my chart now, you can look at the screen, you can see some times where this information became valuable. Even the price as a support, or support as a behavior, not an area, or markets overreact to everything, stop shorting into the hole. These kinds of reminders are things we've discussed on various weekdays, and they started with ideas that I shared here on Sundays. So let's just jump straight into it. Going forward, by the way, these streams will be pretty much exclusive to our Telegram, Discord, and site. So don't get comfortable thinking I'm going to do your trading and thinking for you on Sundays every time. Just saying. Now, macro notes, where are they? Did I delete them? I don't think I deleted them. They should be here somewhere. I mean, it doesn't matter. I wouldn't use that information right now anyway. But usually I would say, yeah, have some notes for the week, for the upcoming week. Things that you can just refer back to. This is getting to be a little out of control. Like, I don't need that. For instance, that stays on my chart no matter what. This is true, but I'm actually going to move it up here as well. And then patience and trade the extremes. These should be known by now. If you don't know these things, go back through some of the older streams. You can see why I have them there and how important I feel those things are. All right, we're going to speed through this. The general idea here, everybody wants to know, are we going up or down? I would say that's a bad question. The real question is, what can you take advantage of? If we were to review last week's trades, actually, we don't even need to do that. We can just talk about the market movement in general. There's a range that's pretty easy to see. So if we were to start at the daily chart, like I tend to do, I know it looks like there's a lot going on the screen, but really it isn't. But for the time being, we're going to keep this here. This has been extreme support in terms of a behavior. It's been very strong. So I'm going to leave that there, but I'm going to turn everything else off for right now. Up or down, what can you take advantage of? To me, when I say trade the extremes, usually the easiest move or the obvious move isn't necessarily the way to go. And there's going to be no pattern. There's going to be nothing on your chart. There's going to be nothing on your screen that tells you what should happen. In fact, I would go so far as to say that currently there is nothing on any of these charts that says that you should be trading a particular setup or have a particular mindset going into the week. So I'll just start you off there. This means each day you probably should approach it with as much information and context as you can, and then see where you have an edge as a trader. Now, that's a more complex answer, but if I were to have a simpler answer, there isn't one. There isn't a simpler answer, actually. I'm not going to keep dumbing things down. I'm okay making things simpler when it makes sense, but that's the reality. You're going to get some upside opportunities. You're going to get some downside opportunities. How you take advantage of them is based on what your skill set is and where you are around for. Prime example, you could have shorted from here, maybe held that trade overnight. Boom, you would have been all right. for like 2 seconds, and then you would have woken up and you would have been pissed off. You could have traded short on these days. I traded short here and I traded short here, but they were not necessarily the obvious trades because at the time, you may recall, you had a lot of people saying Donald Trump's not going to let the market go down. America's 250th birthday, et cetera, et cetera. But you might also recall that weeks ago I said, hey, I think Donald Trump's ability to pump the market has been neutralized in some capacity, and therefore we should undercut what he is, or what the administration, whatever, is able to do for the market. So let's keep that in mind. Additionally, the market doesn't care about the war. The market cares about rates. And I'm going to continue to say that over and over again. As a matter of fact, I think just to help you guys out, we'll go ahead and place those things here. I don't know what happened to my notes. For whatever reason you want to say, right? You could easily say, it's because there's an MOU signed and now there's no real threat of the war, and whatever. There's a bunch of reasons, but that's the first thing. Markets don't know what to think of the new Fed chair. That's another one. We could throw midterm volatility and whatever else in there. Those are the two important points. And then maybe another one we could add. And we saw this a little bit last week. Markets don't care about the war. They care about rates. And we'll put Korean market degens here as well. Those are like the main things to keep in mind. I think those are important because they drive the market dramatically. Right now, it's not trading the same way that the overnight momentum or gap is. And the reason I waited to do this stream in the evening instead of earlier in the day so that we could see where the market opened up. So some continuation here. This is cool. This is all right, right? It's not bad. But let's talk about why that matters, or why that might not be the best thing for the market. This rebound here was more about a return to balance. I'm not buying this. I'm not a fan of how this recovered. But I did warn you pretty much the whole time here. If you're in the Telegram, I talked about this. Trading short past this point was dangerous. And yeah, there was a brief leg down, but this was very dangerous. So know where your extremes are in the market. So anyway, we got these things as our notes to remember. All time frames, keep it there, keep it locked. Literally price action over everything. And that can go over there somewhere. All right, so we got a few good things here. Next would be, I'll keep that there. I'll keep this here for the time being, and then I'll dive into the range. That might be the funniest volatility I've seen all year. Extremely low implied volatility, extremely low range. But, again, this is right after 4th of July. It's fine. Another reason to trade the extremes. And another reason why I'm not so certain that the market has what it takes to trade outside of this range that we've been in. Which, if that's the case, that makes these trades or this trade setup, this plan, so much easier. Because everything is range bound at that point and pretty much confined to whatever trend is established at that time. So implied volatility 7%, 7.14 is the lowest we've seen in a long time. Then I'll come back over here to the daily chart. $745.71. That range is very limited. 742.38. And then we'll just look at what it looks like for Friday. Yeah, it's a little better. It's not great, but it's better. So it increases day over day throughout the rest of the week. So at least we don't have to deal with an entire week of that. I'm going to keep that in mind for tomorrow in terms of being cautious with expecting some sort of volatility because we don't really know exactly what we're going to get there. Let's turn these off because I can't see. $744.78. That's actually the correct number. 741.46. There we go. That's better. And then as far as Friday's close, I'm not even going to worry too much about the pressure rail here. But what I will do is, just for the sake of, yeah, we'll do it. I'll do it anyway. It's fine. This was actually a really important spot on, I was going to say Friday, but throughout the entire week. I actually would like to get a better glimpse into what this means here, or what and how price has been trading around here. So I'm going to keep this in mind. I'm going to leave it where it is, or leave the pressure rail here until tomorrow when I adjust the live rail, which is the blue line. Okay, so I got anchor rail in place. I have, we don't really need to do too much with the previous day's high and then pre-market numbers and all that stuff. Obviously, I'll get, tomorrow in the morning. Previous day's low, there you go. So I got a little bit of a range to work with. I don't even think I need to have that there. Maybe I will go ahead and put that pressure rail here. That's fine. Let's go grab that number one more time. 10.82. $739.74. And you might be wondering, do we have to do this every time? The answer is no, but this kind of preparation is what makes the week a lot easier. You're talking about 5 trading days. If you can't take 10 minutes to prepare, if you can't take an hour to prepare for the kind of money that you can make in the market, you might be cooked. I'm not going to lie. It might be over for you. All right. And let's do week to date. All right, so all the volume traded here and here. There should be no surprise. You're trapped in a range. Super easy stuff. The range for the week is also pretty limited as it stands right now. And even if we were to use the range for tomorrow, it's also very limited. From here, just take 2 seconds and think about what the trade might be here. This is a good test for yourself to ask yourself, how aligned are you and I in our thinking? This is the easiest trade setup I've seen in, I don't know how easy it is compared to other trades, but it's easy. That's all I'm going to say. Water break. Don't let sparkling water ever get room temperature. It's disgusting. All right. So the setup here obviously is limited range, lower volatility. Market breaks higher because it has gapped up, even though you can't see that right here. It gaps up, gets flattened somewhere in this range where it has been rejected repeatedly, and then you get the opportunity to trade short if it doesn't break above here. There you go. That's the game. There ain't really anything other than that to say. There's nothing to add to that, in my view. Also, this is not the previous day's high. It is here, and that is your picture. That is my goal. That is my view for tomorrow. That is really it. Now let's say the market breaks out. You know, if it maintains its gap up. Something else that would really be helpful here is if the Korean market also pulled another fast one like it has been doing recently, where it just absolutely collapses. That would be, I'm not rooting for that market to collapse, but let's stop pretending that there's some moral or ethical implication here. Weakness anywhere else would help support this idea. So that would be my thought process or my focus. Market moves up somewhere in here. This is a it has the potential to be a bull trap setting up, and I would have no problem trading that. I'd love that, actually. That'd be fantastic. Now, that's the easier scenario or setup. The more difficult thing, of course, would be the market opens here flat and breaks down for some reason. So 9:30 shows up, market breaks down a little bit, starts trending or fading away from where this volume has been traded on the week. I would make sure I don't forget that. And hovers around here. Now you got a little bit of a problem because that's not something I would short, especially with lower implied volatility. Even if the market were to break down and hang out around here, I would have to be a little bit more patient and wait for the market to come to me somewhere around here so that I could trade that reversal. Or if it broke through its pre-market low or whatever the low is for that time, I would like for it to break below the previous day's low and the pre-market low. But of course, in a range, you might not get that. So if this is our range here, this is where we've been trapped. This is where SPY has been trading the entire time. To trade the extremes, basically you just have to wait for one of those extremes to be reached, whether it's the highs or the lows. Whether or not you trade continuation depends on how it reaches those areas. So if it breaks out immediately, like very aggressively to the upside, crazy, right? And falls short of one of these levels, one of these pivots, that's the easy short. But much like I traded on Friday, it could do that early breakout here, and it could clear its previous day's high and its pre-market high. So I went short from here. So really the context matters. How it does something matters just as much as where it does whatever. So those two things are important. If the market were to break down aggressively, same thing. Same thing. And even better if it could break here and stay within this range, break down aggressively very early, stay within the range, then trading it back to basically getting a move similar to this one. Now, if the weakness is for other reasons outside of just the technical level, that's when I would be a little careful. I'd be careful because what we got? Friday. I keep saying Friday, Thursday. Thursday. That's my thought process going into this. If there's weakness elsewhere or strength elsewhere, even, maybe those things will add to my directional bias, but that's how I see this. Now, as far as in the setup itself, yeah, we're near all-time highs, but you may have noticed since around here, the market has not been very enthusiastic about it. It's been okay. It's traded. It's fine here. But it's the summer. No volatility really, or lower volatility planned. And uncertainty around rates, which is what the market cares about. You've had every pump attempt. And if the 4th of July can't do it for the market, I think you're going to be hard pressed for there to be any real news that could send this much higher. I'm also not I'm not a big fan of the largest or loudest, I should say, bears, perma bears even, coming around lately and having so much to say. I never like that. I never like when one side gets too confident. And that's anecdotal, but it's something that we've seen a lot of recently. Very, very loud conversations online, especially. People advertising or publicizing their shorts, like Michael Burry being short Micron. I really don't like that. Those trades become crowded very quickly. And it isn't because they can't trade any other way, but those things help determine the hive mind that happens. And the market, by its very nature, traps more traders than anyone else or anything else. And not only does it trap a lot of traders, it tends to move in the direction that's going to cook the most amount of traders, the largest amount. So the moment the trade becomes easy or becomes obvious, you should really be careful. That has always been my view on things. Think about it. The whole rally up, even those posts that I made during this time where I said, hey, maybe you need to consider that the market can continue breaking out. And I'm pretty sure that was somewhere around here when I wrote those posts. It was early April. Because people couldn't believe that this was happening, especially after this candle. And for the longest time throughout all this, I've been saying I think the market actually goes higher this year. I know that sounds crazy to say once we were over 700. I can't believe I'm saying it, but I have my reasons. Point is, this whole time you've had a lot of traders or a lot of people tell you otherwise. I would also argue that while I don't like the degenerate trading in the Korean market, there's only so much you can sell. And you got to remember, this is a direct result of it already being very high. It's not like it's crashing. You know, these crazy moves that it has had, it means it can move like that in either direction, right? But it is trading very high. And that can absolutely continue. So it's not as if, you know, it's in a bear market or it's crashed 20%. That's just, it's not the case. Right? And if it gains any momentum in either direction, maybe the market looks at that as a risk on signal and can continue that in other areas. Because if you recall, that was the reason for the market gapping down here. But the market was able to recover from that and recover in a series of higher lows, even from the scare with what was this around here? June 9th, June 10th. Yeah. So even after the Kevin Warsh situation or the Fed chair situation, market figuring out they don't really like him too much, the market has been able to recover from most of that. What do I think that means for the future? I think we're at a standstill. I think we're at a box where nobody really knows what's going on. I think we're in a range where no one really knows what's going on. In the moment one side of the market gets too confident about its positioning or becomes too obvious, such as the, hey, we're going down and we're 700 is next, all that talk. Very clearly, that was not the case. I would say the same could be said around here. As the market is trading sideways and one side gets too confident, those reversals are swift and they are unforgiving, pretty ugly. And same thing goes for maybe breaking out around here or even holding or hovering around here. The way the market has traded lately leads me to believe that those are some of the easiest short opportunities, and it might end up being that you have to pivot. You have to pivot and say, all right, let me attempt to trade short. Here's a prime example. Here, I let the market make its move here. So I think I traded, let's see, 4 days. So I traded to the upside on this day, or maybe I traded short from here to here and then traded up here. But this doesn't matter. On this day, I waited and I consider myself patient right here. And the market it got a strong red candle here, and then it continued higher to the upside. So I had to close that trade out and then flip long for the last hour of the day. And that was fine. But what I didn't do was stay stubborn about my quote unquote bias, thinking the market would break down. I know what I saw, but the next day, what did I do? Same thing. I waited. I traded to the upside. A perfect reversal for me. It was fantastic. It was a great trade. And then the next day I traded to the downside. And the same things that I was seeing here at the beginning of the week, they came to fruition. But had I waited, had I held this trade short for the entire week, you know what would have happened? The premium would have evaporated. I would have been stuck in that trade, and that trade would have ultimately gone to zero had I held that trade the entire time. Most likely. It would have gotten pretty close to zero, I should say. I would have had to have waited the entire day on Thursday just for it to come back to, getting in the money, maybe. So that is my view. That is how I perceive this upcoming week, is that we are trading very much within a range, and I don't expect the market to be able to make a strong move out of it. There are no catalysts that I can see. There's no major implied volatility shown in the premium for the market. So that's how I'm going to approach it. So that's for tomorrow. The next day, let's say the market hovers above one of these pivots. I'm going to take the same approach where if we're trading higher at that time, I would look for retests of support, things that were previous resistance even, and try and determine or figure out, is support behaving like support? Not is it just an area, but is that area strong? Those are the things that I would be thinking about. That's what I would ask myself constantly. And as we have some higher implied volatility, what kind of intraday setups those are creating for me. Now, in the past, we've talked about how the Qs have led SPY in some capacity. Markets are expecting larger move on Thursday. I mean, this is true, but we don't need that now. But SMH and NASDAQ, or Qs, which track NASDAQ performance, these moves are a little bit more pronounced, a little bit more dramatic. Even then, I don't think we can ignore the fact that it still is trading within a range. So once again, I'll get rid of as many of these lines as I can. I don't think we need any of those pivots here. Same thing for this. I would also recommend that you start looking at things through the lens of ranges instead of singular lines. I'm going to come back and keep referring back to this trade from Friday because it is the exact thing that gets a lot of traders in trouble. Break above the pre-market high, break above the previous day's high, go long. Especially when the market pulls back. That was the trade. And then you had that whole narrative about America's 250th birthday and Trump's not going to let the market be red. Those traders that have those very simple setups, while they work sometimes, there was an invisible ceiling. There was a phantom ceiling here. And the market even did something funny where it went above 750 as well as a mental pivot. So that may have seemed like the all-in thing. But again, the answer was in how the markets were trading. As a matter of fact, on this day, when I traded long at the end of the day, I even said, I'm not going to hold this trade because I don't like how the market is doing whatever it's doing. It was the close. I didn't like the close. So the signs were there. Signs were there. So using Monday to see maybe some of the activity, I'll take some of that into account. But throughout the course of the week, you really want to make notes constantly about what it is that you're seeing. And you don't have to watch your screens all day. I don't. But those early sessions, first, 30 minutes to an hour, can be good if you have that opportunity or you have that luxury. Again, I already told you how I plan to trade this regardless. If I trade at all, give yourself the, matter of fact, let's go back over here and let's put that on the chart. And hopefully this doesn't come back to haunt you, but patience, restraint, those are important things. Restraint can also mean not trading, or it can mean trading smaller. Okay, so I would keep that in mind. As far as in the range for this, I could go in and use the rangefinder. I don't really feel like it, to be honest, for the Qs, because I don't trade this name. But if the implied volatility is a little better, maybe I would. Maybe I'd consider it. Okay. Well, maybe now we got to have a conversation. Let's see what it looks like for tomorrow. You know what? I'm going to be honest. Maybe this is a better trade. Yeah, maybe this is a better trade. All right, I wasn't expecting that, but let's see. This range is hilarious. Price moved absolutely nowhere on Friday or Thursday. 712.60. $705.84. And let's go take a look at what the Friday numbers are. $702.35. Same thing. You see the same plan, right? It's the exact same plan, only you got a little bit more implied volatility to go with and maybe a little bit of a better range. But same plan. See, it's the same range you got here for Monday. And the yellow lines show you the range that you have for Friday, essentially. So if the market were to, forget about where it gaps up or down from. The market breaks down aggressively, let's say, to start the day off and hovers around here. Okay, cool. That'd be great. Because from around this spot, most likely, I would be looking for that reversal. Let's say the market gaps up, as it looks like it might do. And you get all the bullish narratives and you got everything else going on. I would obviously look for price to somewhere around here. Maybe get that rejection. I'd be hard pressed to trade continuation here unless a few things are happening at once. Break the pre-market high, previous day's high, some momentum, get a strong pullback. That pullback has to remain support and behave like support, and also need to be somewhere, I would argue, in this range and maybe above both of these rails. That's what I would look for. So price could break out around here early, pull back to this rail somewhere around here, which actually makes a lot of sense technically or structurally. As you can see, this has been support. This has been a breakout area. So that's what I would be looking for. And that's both trades. That's SPY and the Qs wrapped up with a bow on it, just for you. Super easy, super simple stuff. The reason I don't spend so much time plotting individual lines or even areas in a week like this because it's the summer. When the fall comes around, then sure, maybe you don't have to do so much groundwork in the early morning. You don't have to watch the price action so much. Maybe you can just trade a trend. That's cool. But if you try and pick a direction the night before, or you take a trade based on just technical levels, you're going to find, just like everybody who traded throughout the last 2 weeks, directionally, you're going to be in trouble. You can't hold a trade for a week, 2 weeks. You're trapped in a range. Deal with it. That's the sell and may go away. That's where that comes from. Okay. So all in all, that is going to be my approach going into the week. As far as on a macro level or from an economic calendar, nothing. Pretty much nothing. The usual. The market doesn't even know how to read this. Nothing and nothing. So I'd expect things to get a little quieter on the front in the market. Block out the noise. Let other people make the noise. Let other people forecast what's going to happen. You can get in where you fit in. Remember, look for the extremes, trade the extremes. Markets overreact to everything. Let them overreact. And then if you join in the trend, allow it to be momentum, but make sure you have a reason for entering that trade, not just because, oh, it's going up right now, let me trade to the upside. Oh, it's going down right now, let me trade to the downside. Instead, try and capture the general idea, the area of the market. Tight range. Wait for the trade to come to you. Take the trade. Be confident. If it isn't working, adjust. That simple. That's really all there is to it. I'm going to let you guys go back to watching your World Cup games. And also out here, they got fireworks going off like crazy. And in the Discord or Telegram, if you have trades that you'd like for me to review or setups, we can talk about those things. Make sure that you're staying alert for updates in the chat. I'm out.